CIBC Bank. Whether you're a business owner or thinking about starting your business, you will learn what you need to know about bank financing during this discussion. We will talk about loans, lines of credit, and other available resources that can help you on your entrepreneurial journey. Please have your notes out and be prepared to be informed. Ladies and gentlemen, please welcome Ms. Annette Vaga. Thank you.
Good morning. Good morning to everyone. Yes, this is Annette Vega. I'm with the CIBC Bank. I work in the Community Development Group. Been with the bank about 4 years, but have my whole lifetime I've been in banking, so bring a lot of stuff to the table. And today we are going to be talking about financing your business. I know these times have been very tough for small business owners, and just kind of trying to find your way. There are a lot of business owners that had to change kind of their just what they're doing. So show you an example of a boutique that catered mostly to weddings and dresses for special occasions. They had to change their vision, and they decided to start doing masks for COVID-19. So I'm sure a lot of you business owners are revamping and just kind of thinking, what's next? What can I do to better my business, to change the strategy? And here, CIBC is here to help you with the financing of your business. So I'm going to have a few a PowerPoint presentation with different ways to help you down this process. I can tell you from my experience as being also a family of entrepreneurs, have a dad that has a silk screening business. So I know firsthand, what it is to be an entrepreneur and have need that financing and that access to capital. And so we'll be talking a little bit about this today. So thank you for joining us today. I really appreciate the opportunity to host this and to help everyone. So I'm hoping that you take something out of this today, and this will help you grow your business. This is a passion of mine. This is what I do day in and day out. A little different working from home and not being able to meet with my clients in person, but we could definitely figure out a way either virtually or through email. So I guess the first thing that a business owner needs to know is how much money do you need? A lot of times business owners have an idea, know what they want to do, but they haven't really put in a lot of thought on how much money they actually need. So things that you could think about are, what do you need financing for? Buying supplies, inventory. And these are things that you want to get while waiting to get paid from your vendors. Paying payroll and rent, buying equipment and fixtures, purchasing equipment or technology upgrades, and buying the business. Buying the business, I would say, is a big one. That's something that you can prepare for as your business continues to grow. Prioritize those areas where your options are limited to paying in cash, and review your alternatives where there may be another way. For example, it is not necessary to pay all cash for a delivery truck when you can rent or lease one. So it's just prioritizing where you want to put your actual cash and when you want to have the resources from a lender. Where to get the money? Business owners have a wide variety of options when it comes to funding. Below is a list of possible options for a small business to research and consider. So lending options for small businesses. So there's your traditional banks, there's credit unions, there's the SBA loans that were huge with the PPP and the EIDL loans. early in the COVID-19 crisis. There's microfinance options such as the WBDC, Accion, Justin Peterson, and others that are on this PowerPoint. Crowdfunding such as Kiva, Kickstarter, True Crowd, and asset-based lending. That's more industrial-based. Crestmark and commercial capital. Factoring, CIT, First Commercial, and 12.5. And then there's online business lending, Cabbage, Lending Club, OnDeck, Lending Circle, and Foundation, etc. In my opinion, what you need to look for when you're looking for a lender would be, what are their interest rates? How are these interest rates going to affect your day-to-day operations? Some of these companies, they'll charge you daily interest, even if you don't have any income coming in that day. So I would read the fine print, make sure that you know what your interest rate is, what your term is, and just be aware of what they call predatory lending. Check that interest rate, check the term. That's very important when you're looking for a lender or some type of financing to either start up your business or get some capital. So 5 things that we as lenders look for. We're looking for the 5 C's of credit. So we're looking for capacity, credit character, collateral, capitalization, and the conditions, current conditions. Capacity. Capacity is ability to pay the loan. So what are your monthly fixed expenses? Mortgage, rent, car notes, student loans, credit card debt. How do you intend to pay the loan back? Business, personal, both. Other expected loan payments. So when we're doing our underwriting for our loans, we look at all of this. We want to make sure that we are not putting you in a bad place. We want to make sure that we are setting you up for success. So we take your business income and also your personal expenses, and we want to make sure that you have sufficient funds to repay your expenses and also pay your personal expenses and the business expenses. Calculating your global cash flow. All income from business and personal minus all personal expenses and debt. So that's what we look at. All income from the business and personal. So you may have your business generating income, but then you also may have additional income coming maybe from a part-time job or a spouse or a partner, and that all is taken into account minus your personal expenses and your debt. The remaining amount should exceed the monthly loan payment. This way we know that we are not putting you in a bad place. We want to make sure you're in a good place. Credit and character. So there's 3 credit bureaus that we work with, and most lenders do as well. And those are TransUnion, Experian, and Equifax. Those 3 will let us know pretty much, give us a report card. So they're going to let us know, what your timeliness is on payments, what your credit score is, how long you've been part of a bureau, if you have any judgments, any bankruptcies, all of that good stuff appears on the credit bureau. For small business loans, we examine your personal credit report because we do have you guarantee the loans. Although the loan may be in a business name, we will continue to use your personal credit report to check to see if you're able to repay the debt. So the FICO scores, they range between 300 to 850. 300 being very poor to 850 being excellent. Items such as bankruptcy, tax liens, judgments, child support, and arrears may be automatic denials for many lenders. In our case, a bankruptcy, as long as it's dismissed, we can take a look at the deal. However, you do have a tax lien that has not been satisfied, a judgment, or child support and arrears, we may not be able to support you at this time. So it's very important to take your credit score very serious. Like I said, it's like a report card. A report card that it pretty much reflects how you're doing financially. So keep in mind that if you have one 30-day past due payment on your credit report, that can negatively affect your credit by at least 100 points. So if you had a perfect credit score of 850 and it goes down to 750, well, it might not be the end of the world, but if you have 650 and it goes down to 550, it's going to be hard for you to find credit. So it's very imperative that those payments are made timely, so this way you can get access to capital. Another thing you might want to think about is if you have a credit card, and for example, say you have a $1,000 credit limit, and you maximize that credit card, you max it to $1,000. That's going to also negatively impact your credit. Usually, typically, credit bureau scores are calculated using 33% of that exposure. So in this case, if you have a $1,000 credit limit and you utilize only $330 of it, you should be in a good place, and you keep, paying down and utilizing it. You should be in a good place. So credit is not just important, not just for credit, but you need it for apartment renting, for a job, for insurance. So a lot of different companies utilize your credit score to make a decision. So major factors contributing to credit score: past payment history, 35%. Credit usage ratio, 30%. Credit length, 15%. Inquiries, 10%. And type, 10%. So these are major factors that contribute to your credit score. So as you can see, the one that affects it the most is your past payment history, 35%. That's a big number. The next thing we look at is collateral. Collateral is the business and or personal assets pledged to help secure the loan. Common types of collateral are equity in your home, accounts receivable, inventory of the business, and equipment. So if you have equity in your home, that's a way of pledging that property, so this way you can get the capital for your home, for your business. For your accounts receivable, that's another way. The bank will take as collateral the receivables and grant you X amount of dollars so that you could work with that money so that you can continue to grow your business. Inventory of the business and equipment is also another way. The bank will take do a UCC lien on the inventory and the business and the equipment to be able to extend a line of credit or a term loan for you to continue to grow the business. Lenders go through an evaluation of the collateral to determine how much they can lend you. So that's very important that we take into account what do you have to pledge to secure the loan. Capitalization. Capitalization is the amount of money the owner personally invests into the company. Lenders are usually more willing to lend to someone who has invested some of their own money into the business. We call it skin in the game. So we want to make sure that you put in capital into the business in order for us to know that this is something serious. No precise measure of amount of enough capital, rather it is specific to each deal. So we need to look at each deal differently depending on the type of business. Conditions, internal factors inside the business, loan proceeds, working capital versus equipment versus inventory versus renovations. So the loan proceeds, we need to see what they're going to be utilized for. What is your plan to use these funds? It could be you want working capital, so you can wait for your vendors to repay you. Sometimes it takes 30, 60, even 90 days to get repaid from your vendors. So if you have working capital, such as a line of credit, that line of credit is going to help you so that you can keep running the business by utilizing the line of credit. And once that vendor pays you, you're able to pay down that line of credit and keep it revolving. A revolving line of credit is very important for a lender because that line of credit, if it's evergreen, and that's a term that banks use, so what that means is that if you qualify for a $10,000 line of credit and the whole 12 months you do not pay it down, it's considered an evergreen loan. So the banks really want to see you utilize the funds and pay them down and then revolve the line of credit. Very important that banks see that coming from a business owner. Now, if you're looking for an equipment loan, well, an equipment loan, we would do a term loan that would allow you to pay back the principal and the interest over a period of time. Typically, it's 3 years. Depending on the size of the loan, it could be 5 years. And inventory versus renovations. So we want inventory, we want to see what it is that you have and what it is that you want to do to grow it or to maintain it. And then renovations. I guess renovations would be, there's a lot of factors into renovations. It could be a big project, it could be a small project, to be simple as painting. But we look at everything and want to make sure that, again, that we're setting you up for success. External factors outside the business could be economic, such as COVID, environmental, legislative, and industrial. Will a certain law affect the businesses and industry? I'm sure a lot of businesses were affected during COVID, especially restaurants, bars. There's so many limitations right now, but it's for the well-being of the citizens of Chicago. But that affects your business, so you need to see how and what you can do so that you can change your business plan. Maybe do takeout. So there's a lot of factors that are going into how we protect the citizens during this pandemic. But obviously, it's something that you need to kind of take into perspective and see, you know, how these laws affect the business. Is the industry growing or diminishing? What's the competitive landscape of your industry? So all of these factors are taken into account when we are doing a loan for the business. How to get started? Securing a loan begins by knowing what your lender requires. So if you have a complete package for a lender for you to begin the financing, the odds of you getting that loan are going to be greater and faster. For a business loan, a lender typically requires the following. We require business financial statements. The business financial statements include your interim statements, such as your profit and loss statement, your year-to-date profit and loss statement, your balance sheet, your accounts receivables. All of that is important for us to look at when we're qualifying you for a loan. Your business tax returns, a business plan with a budget or projection, personal financial statements, personal tax returns. All of these items are very important for a lender to look at when they're looking to approve you for a business loan. Be ready to answer questions about your business. Be prepared to tell lenders why you need the money and to be as precise as possible. A lender wants to know what the funds are going to be utilized for. It's documented. We want to make sure that, again, we're setting you up for success. And by us being able to look at your business financial statements, kind of just seeing where you're at, you know, what the business is doing. We usually like to see, for larger loans, at least 2 to 3 years of business tax returns. And what we do is we compare year to year. We want to see if there's growth or if there's a decline. Obviously, if there's a growth, that's very positive. But if there is a decline, we also want to know what happened during that decline. Maybe something happened in the family where you couldn't attend the business. Or maybe you're changing your strategy because whatever business plan you had at the time didn't work. So all of that is important to bring to your lender. So this way, when we are approving you for this loan, we want to make sure we have all the facts in order. So with this, I'm going to go through a few slides now, and these are of our program. So we have the Entrepreneurial Loan Program. We partner with organizations in Chicago, St. Louis, Detroit, and Milwaukee to support entrepreneur training programs to give startup and early stage small businesses important skills, resources, and products to help them succeed. Eligible graduates of these programs are encouraged to apply, but not guaranteed financing from CIBC. So for everyone on this call, if you attend the workshop program, and you can get more details from Elisa or Geraldine at the city, this program is 9 workshops, 9 specific workshops that need to be attended. And at the end of the 9 workshops within a 6-month period, you may apply for an entrepreneurial loan program from CIBC Bank. The program is very straightforward, and we work with a lot of small business owners. So it was created to support startups or early stage small businesses with important working capital. Lines of credit and term loans, up to $10,000 for startup, up to $30,000 for early stage businesses, no fees or prepayment penalties. And the maximum term is 3 years for the term loan. Applicant must have successfully completed an approved training program. So the entrepreneur training program, when we say up to $10,000 for a startup, we can mix it up. And what that means is, say for instance, you need $2,000 to get your business started. So those $2,000 will help you purchase the initial equipment for your business. Then we can do an $8,000 line of credit. The line of credit will allow you to, one, not make payments until you start using it. And it will help have that capital available in the event you need it. Business startups are, key to the success of businesses in the city of Chicago. So those $10,000 can help you to initiate that business. And then we have up to $30,000 for early stage businesses. What early stage businesses means that you need at least 1 year of tax returns, be it a Schedule C on your personal or a separate tax return for your corporation, limited liability company, however you wish to set up your business. It could be up to $30,000. And the same, that $30,000 can be split up into different ways as a line of credit and as a term loan. 50-50, 15,000 for term loan, 15,000 for a line of credit. Or we can just see what best suits your business. There's no fees or prepayment penalties, and the maximum term is 3 years. Then we have the CIBC EasyPath Business Financing. So that's very similar to the Entrepreneurial Training Loan Program. The difference is that you do not need to take one of these courses to apply for this loan. However, if you take an ETP loan program, the odds of you getting approved are better. The EasyPath Business Financing Program, the business does need to be in a lower moderate income census tract. So the EasyPath Business Financing Program was specifically designed to provide business owners with options to help achieve their business goals, help business owners make smart financial decisions for their business. The EasyPath business financing products are available to businesses located in low to moderate income census tracts in each of the bank's assessment areas. The EasyPath business financing products have flexible underwriting standards, which can result in a higher approval rate than traditional underwriting. A term loan requires the small business owners to make set payments on a regular schedule over a predetermined period of time. With a term loan, the small business owner receives the loan proceeds up front. Loans up to $30,000. The term is 1 year. So after a year, you're not required to pay off that full amount that's left, but we would renew it for another year. The fixed rate is 7% and no origination fees. So the fixed rate of 7%, that's our traditional product. But right now we have a promotion where the fixed interest rate is 5.75 and there's no origination fees. Time in business, you have to be in business for at least 1 year minimum. The amortization is up to 5 years. Renewable annually. Available with FICO scores of 600 and above, and personal guarantee is required. So for this program, it's very attractive to a lot of business owners. So it's great for businesses that already have been in business for 1 year and are looking for capital to continue to grow. The EasyPath revolving line of credit. A revolving line of credit provides access to a predetermined borrowing amount to use at the borrower's discretion. So you only start paying back when you start utilizing the funds, and you only pay interest on the amount that you advance. So if you have a $30,000 approved line of credit and utilize $5,000 of the funds, you will only be charged interest on the $5,000. Principal is not charged on a monthly basis, but you can make principal reductions. That will help you ease the principal balance. Funds are drawn as needed. The term is 364 days, and the interest rate is prime plus 4, and there's no origination fees. Right now, prime is at 3 1/4. So 3 1/4 plus 4 is 7 1/4. That is a floating rate, variable rate. So if interest rates do start to increase, then that rate will change. Like I said, you do have to be in business for 1 year, and your FICO score can be 600 and above. Personal guarantee required. The revolving line of credit is a great tool to have. We charge no fees. So be it the Entrepreneur Training Program or the line of credit, the EasyPath line of credit, whichever one you qualify for, it's a great tool to have in the event that you need something for the business. A perfect example is if one of your machines will be available, where the capital will come from. So it's something good to have. Also, if you have vendors that are paying you 30, 60, 90 days late, you have the line of credit to kind of help you during that process. So I always say to business owners, it's better to come to the bank when you don't need the money than when you actually need the money. A lot of times business owners will come to the bank when they have maxed out their credit cards or when they have no capital of their own left. So it's vital that business owners come to the bank before they need the money. This way, that capital is available and they're able to have those funds easily accessible. It's simple. A phone call and an email to transfer those funds into your deposit account with the bank. So this way, in less than 24 hours, the funds are available, made available to the business owner. So it's just some food for thought for you to kind of just keep that in mind, that having the capital available sooner than later is important for business owners. Some business owners are very well capitalized, and that's great. That's a great place to be. But think about it. If you have a line of credit where you don't have to pay any interest and you don't have to use any of your personal money, I guess it's all up to each individual business owner. Then we have what's called the EasyPath Step Loan. The EasyPath Step Loan, Business Step Loan, is a tool that can be used to improve a company's financial credit standing that can assist in obtaining future financing. Loan proceeds are placed into an interest-bearing certificate of deposit. Small business owners make monthly payments until the loan is repaid. Then the CD plus interest earned becomes theirs. So it's a $500 minimum, $10,000 maximum. The term is from 12 to 36 months. Fixed rate of 5% and no origination fees. Proceeds are placed in a CD account that matches loan terms. Need to prove sufficient income to make the loan payments. Loan is always 100% collateralized, and there is no FICO requirement. So you may ask yourself, who would need this loan? Well, the EasyPath Step Loan was made for business owners that do not have sufficient credit. So their credit score is under 600, and they are not able to obtain a traditional loan with the bank. So the EasyPath Step Loan helps them to build that credit. So by your business applying for one of these loans, if they are not in a position yet where the individual guarantor's credit score is not over 600, this is a good tool or a good loan to have. One, it's building your credit, and two, the savings account. So depending on where you qualify, because you do need to prove that you're sufficient enough to make the payments, you can apply for this EasyPath Step Loan, which is considered a credit builder. Then we go to our last product in the community development group, and this is the Community Plus Loan. The Community Plus Loan specifically targets neighborhood businesses that have passed that critical first year of business, produce sustainable cash flow, and whose owners have good credit. We provide financing that is typical below market rate, must be in business generating revenue for 1 year, gross revenues must be below $1 million, and term loans of 1 to 5 years. Fixed rate of 6 to 7%, and no origination fees. Line of credit for 1 year, variable rate of prime plus 2%, no origination fees. Available with minimum scores of 660, and the personal guarantee is required. So this loan product goes up to $100,000. and we can work with your business to see which is the best approach. Right now we have a promotion for the line of credit where it's prime, floating, with no origination fees. The next product that we have for the bank is Beautify Your Business. So CIBC offers loans up to 15% to qualified business owners along commercial corridors and special service areas. Only special service areas designated by CIBC will be considered. Loan must be used for improvements to or general maintenance of the building, such as repair or replace signage, windows, doors, and exterior lighting. Perform brick cleaning and tuck pointing, and restore original architectural features, and paint the building exterior. So this is another product that we have that is great for small business owners that want to change the look of their business or just want to invest in the architectural features of the business. Business Overdraft. Business Overdraft is another product that we offer, which is tied to a deposit account. So this allows for the business owner to have this as a backup, if you want to call it. So if you have a deposit account with the bank and your merchants are sending you checks or your vendors are sending you checks, and you're counting on those funds, obviously, to continue to run your business, but one of those checks bounced for whatever reason. This business overdraft helps cover that overdraft, and you will not be charged the overdraft fees. So the applicant and business must be in the bank's assessment area. Small business checking will be eligible for a business overdraft. The revenues of the business cannot exceed $1 million, and all owners of the business have 20% or more ownership must sign and guarantee the business overdraft. We must have the original signed application. If owners and guarantors of a business have multiple business DDA accounts, their approved business overdraft amount will be reduced per account. So this is a great tool for you to have it tied to your checking account. Like I said, in the event that someone gives you a check and your account goes negative, or if you are busy with the business and you're not able to make it to the bank and the account overdraws, this business overdraft account will help cover that. We also have small business administration loans. This is handled by one of my colleagues. So we have 7A loans that are used for acquisition, construction, expansion of owner-occupied real estate, purchase of equipment, and personal permanent working capital. The maximum loan amount is $5 million. 504 loans provide long-term fixed-rate financing for land and buildings and must be done in conjunction with a community development corporation. So SBA loans are also offered at the bank if a business is looking to work with the SBA. Commercial real estate loans, owner-occupied properties. That's for business owner-occupied properties. The loans available for up to 75% of the value or purchase price. So if the property is worth, the purchase price is $100,000, you would have to come up with $25,000 as a down payment. We finance up to 75%. The typical loan terms have a 25-year amortization with a 5-year balloon. Properties can be owned individually or corporately. So these are for business owners that want to invest in real estate. They can own their business on the first floor and have the apartments as rental. Typically, we would like to see ownership be 50% or greater for the commercial portion of it. Traditional commercial lending. CIBC provides financing solutions tailored to your needs. Our understanding of many unique aspects of your business allows us to work together to accommodate your financing requirements. We employ our creativity, understanding, and experience and expertise to build the right solutions for you. Revolving lines of credit, whether you want to purchase inventory, manage temporary cash flow. So the loans I'm going over right now are traditional commercial lending. This is typically for businesses that are already over $1 million in sales. So these are for businesses that are at a point where they don't need, they need more capital. They need more funds to continue to operate. So the revolving line of credit is a traditional product that we have for commercial lending. So it would be your typical pricing, which would probably be prime plus 1 or prime plus 2, and there would be some fees involved. Your term loans as well. A term loan can give you the resources you need to finance expansion, add inventory, invest in new equipment, or otherwise help your company grow. Our team can help you structure a deal with competitive rates and appropriate maturity. We also have letters of credit. A letter of credit provides assurance to your trading partner that your obligations will be paid using the bank's credit, as long as documents called for in the letter of credit meet the terms stated. There are many different letter of credit options, so it is important to talk to one of our relationship managers to learn more. All loans subject to credit approval. Personal guarantee required for all Entrepreneurial, EasyPath, and Community Plus loans. Terms and conditions apply. EasyPath Business Loan Program is limited to businesses located in low to moderate income census tracts in the following counties. I won't name all of them, but they're on the PowerPoint. But for the city of Chicago, Cook County is one of the counties that we service. And I open it up for questions. On this PowerPoint, you can see my contact information. You can use the chat for questions.
Hi, it's Gerald. Is there a time that the loan is paid down annually? Example, 1 month?
So in other words, if they have a working capital loan with us and they need it for 1 month only, is that what you're saying? I don't see the question, so let me see. Maybe I can check them.
It came to the host properly. So again, it's for working capital loans, is there a recommended length of time that the loan is paid down annually?
Yes, so we would like to see the loan paid down to zero at least once during the 12th month. So if it's a line of credit, we would like to see there to be a zero balance in that line of credit over those 12 months. I hope I answered the question.
Another question that came in is, will this presentation be available? Yes, it has been recorded and will be posted on the Chicago BACP YouTube channel. Another question just came in. How do I get information about the Entrepreneur program? Annette, if you could follow up with that one.
Yes. So you can reach me. The number on the slide was my office number, but you can reach me on my cell number. My cell number is 773-817-1215. You can reach me directly on my cell number if you need more information on the entrepreneur training program.
Another question just came in. What are some of the requirements to get a commercial real estate loan?
So to get a commercial real estate loan, you would need, one, of course, a 25% verification of funds for the down payment. We would need 2 years of tax returns, a personal financial statement. And again, all of this information I can send to you via email because it's kind of a list of information. My email is my full name, Annette.Vega, V-E-G-A, @CIBC.com. You can send me an email and I will gladly reply to see what you would need to get a commercial real estate loan.
Annette, are you able to repeat your phone number one more time, please?
Sure, 773-817-1215.
Another question that came in are, can the loans be used for a nonprofit?
We do not do loans for a non-for-profit in my area, but we do have an area that focuses on non-for-profits.
Another question that just came in is, my question is, what is the training that is needed for a startup loan?
So that would be the 9 workshops with the City of Chicago. And it would have to be within a 6-month period. You would need to contact the City of Chicago for them to give you that guidance as to what are the 9 workshops that need to be attended.
You could reach out for information on the Business Startup Certificate Program by emailing BACP outreach at cityofchicago.org. For anyone who is currently in the program, they could email that and you will get credit for today's workshop. For information on joining it, please send an email to BACP outreach at cityofchicago.org. And then another question that came in is, how do you begin with business credit?
Business credit, from my understanding, one, of course, getting a business loan, that would be one way. The other way is with your vendors. If you have vendors and you pay with your, say, business credit card, you can apply for a business credit card. That's how your business can start earning that business credit.
Okay, great. Is there any other questions? Please feel free to send your questions through the chat. Give it a few seconds. If not, Stella, can you make the closing remarks, please?
Thank you for attending this morning's webinar on financing your business with CIBC Bank. Thank you to our webinar presenter, Ms. Annette Vega. If you are interested and need to process a business licenses are being processed online by visiting chicagobusinessdirect.org. Again, if you need a business license, you can do so by applying online at chicagobusinessdirect.org. Again, if you have any questions regarding this particular webinar or any of our upcoming webinars, please send us an email to bacpoutreach@cityofchicago.org, or you can visit our website at chicago.gov/business education. Thank you.